Okay, good morning and good afternoon, everybody. My name is Nathan Dean. Again, welcome to the Monday call where we're going to go through everything Washington related. So let's just jump right into it. Last week on this call, I said that I was cautiously optimistic that Ukraine, Israel, and Taiwan aid would pass, but I didn't say it was going to happen in just a week. Now I'm highly optimistic that it's going to pass. Over the weekend, we saw the House vote via bipartisan support to approve a $95.3 billion aid deal for Ukraine, Israel, and Taiwan. Now, the key takeaways that you need to know is first, the Senate will most likely pass this either tonight tomorrow night or early morning Wednesday. It really depends on how some of the senators who are against the deal either try and delay it some. I think a lot of the senators who are supposed to be on recess this week really want to get to Reagan Airport and just get out of town. So probably around tomorrow afternoon, I'm guessing. But in that $95.3 billion deal, what you need to know is that the bulk of it goes to Ukraine. And the bulk of it will ultimately favor contractors like RTX and General Dynamics. My colleague Will Lee and I have a note out in the terminal. If you need it, just shoot a note to me and I'll send it to you. Um, Essentially stating that because most of the aid to Ukraine is weapons and munitions based, and that they are weapons and munitions created here by the U.S. industrial base, that those two contractors stand to get a little bit more piece of the pie when it comes to that type of funding. Other thing to note is that the Israeli aid is a little bit less. It's $5.2 billion to replace the weapons by those Israeli operated missile defense systems. But also, just as you think in terms of how do I manage investments through the Israeli Iranian conflict, just note that Israel has a desire to purchase 50 F-15 fighters, that's Boeing, and has also talked about purchasing some F-35 fighters, which is Lockheed Martin. So my colleague Will Lee has a lot more on this. So if you ever need to get into the defense contracting industry, let us know. I saw a lot of those stocks had some movement on them on Friday. So other embedded in this bill was really the fourth piece of legislation. Remember, this was four separate pieces of legislation: Ukraine, Israel, Taiwan, and the fourth was the Repo Act and a TikTok ban. Now, the Repo Act reclaims Russian oligarch frozen money to spend for some of this. There's about 300 billion across the globe. Only 8 to 10 of that is here in the United States, and we need our European allies to move forward on the rest. That obviously opens up geopolitical and macro level concerns that I'm not going to talk about, but that passed, and also the TikTok ban. Now, the TikTok ban, nobody's going to see it divest this year. You know, my colleague Matt Schettenhelm and I actually had a call on Friday where we talked through Matt's forecast of what's going to happen here. Under the legislation, they essentially get a year to divest. If they don't, then you're going to see a lawsuit. Now, Matt put a piece out on the terminal just this morning. Obviously, a lot of things can happen in a year, but just his high level early thoughts was that the US government has about a 70% chance of keeping the law sticking, and that TikTok eventually will be banned. But if anybody's got teenagers and they're concerned about what's going to happen, TikTok's not going anywhere for the next year, and a lot of things can happen. Also, I want to talk about a couple of news reports that came out on Friday about executive compensation. So, if you are a banker, you probably know that under Dodd-Frank 14 years ago, there was a rule that required an executive compensation bonus to be proposed and to be promulgated into regulations. And here we are 14 years later, and nothing has happened. Now, in 2016, there was a proposal, and it was by 6 regulators. It was by the FDIC, the Office of the Comptroller of the Currency, the Fed, the National Credit Union Administration, FHFA, and the SEC. Now, news articles from last week suggest that the FDIC and the OCC are moving forward and are going to propose a rule in the next few weeks. Now, if you go back to March, Fed Chairman Jerome Powell said in a testimony up on Capitol Hill that there really hasn't been any discussions about this, and it's really not on the Fed's radar. Now, the reason why I think the OCC and the FDIC are moving forward is because Chairman Martin Gruenberg over at the FDIC told Capitol Hill last year that this proposal would be out by the tail end of 2023. And here we are, and it's not out. Now, getting 6 regulators to agree on a proposal is really hard. I mean, if you worked in the Volcker rule, you know exactly what I'm talking about, where there were differences. And at one point, the SEC said, I'm going with my own proposal, and there was going to be regulatory arbitrage. So it's not surprising that this hasn't happened just yet. Getting those 6 agencies, especially with the Fed focused on Basel III Endgame, isn't going to be easy. So what I'm telling folks is that even if the OCC and the FDIC proposal comes out, and the report suggests that it's based off the 2016 proposal, if that comes out, I think it's more of a political exercise as opposed to an actual threat to banker bonuses. Now, what happens here is the OCCA, the FDIC proposal comes out. It partially is designed to influence the Fed, put pressure on the Fed so that if the Fed goes up to testify on Capitol Hill, Representative Velasquez from New York, for example, is going to say the FDIC and the OCC put out their proposal. Why haven't you? That's not an easy question to answer. However, this really just depends on the election. If President Trump wins in November, this rule essentially could be scrapped, indefinitely delayed another 4 years. If President Biden wins in November, don't be surprised if the Fed decides to repropose their own rule and potentially put out changes. Now, we don't know what the rule states, and it says that it's based off the 2016 rule, but we really don't know what changes are going to be out there. But if the Fed decides to put out a separate rule, then you got regulatory arbitrage again. So it's one of those things where certain banking units would be covered, other banking units wouldn't, and a big headache and compliance heartache, if you will, or for a lot of bankers out there. So what we're saying is that this is just a political exercise right now. Don't be too worried about trying to figure out what the compensation requirements are going to be. Remember, this only applies to excessive risk takers and to the C-suite. So if you're a junior trader out there, this probably won't apply to you. But stay tuned. You're going to see a lot of headlines about this in the next few weeks, and we're going to have a much bigger report out on the terminal tomorrow that looks also back at the 2016 rule and try and predict on what they're going to do here. So the next thing to talk about, now that the Ukraine, Israel, and Taiwan aid package will probably be law by either tomorrow night or Wednesday, the next thing to pay attention to is the FAA reauthorization. Now, this is due May 10th, and normally I would tell folks, look, the FAA reauthorization isn't a bill that we track all that much here at Bloomberg Intelligence, but this is going to be, there's a lot of whispers coming from lobbyists and a lot of whispers coming from staffers that everybody's trying to attach something to this bill to get it across. Because remember, in terms of like must-pass pieces of legislation, you got the FAA reauthorization, the farm bill at a certain point will go. You've got the funding bill in September that will probably be just a continuing resolution. So there's only so many opportunities you can get to attach something to this bill and then get it to the president's desk. Now, in this case, I think there's really two scenarios from my coverage areas. The first scenario is what we talked about last week was this idea of a stablecoin marijuana banking bill. So the idea is you get something similar to Patrick McHenry's stablecoin bill and you team it up with the Safer Banking Act. Now, Senator Sherrod Brown, the chairman of the Senate Banking Committee, said last week that he's open to the idea, and that that helps with the Elizabeth Warren issue. Doesn't help with the Patrick McHenry, Speaker Mike Johnson issue on marijuana banking. But if somehow it gets attached to the FAA reauthorization bill, and at this point I'm still not convinced, totally feasible, totally open, totally can happen, but I'm still not convinced at this point. Don't be surprised if those marijuana equities start to have hot sauce, because April 20th happened this past weekend, and there's a lot of folks on Twitter right now, especially the MSOS ETF folks, who think that DEA reschedulization was going to happen on Friday. So don't be surprised if these marijuana equities have a little bit of hot sauce on them going into May 10th. The other thing to keep an eye on is Senator Durbin's credit card competition bill. So this is what he co-sponsored with Senator Marshall. This talks about additional competition for Visa and MasterCard in their networks. It requires banks with $100 billion in assets to offer up additional networks. It could be Discover, it could be American Express, it could be somebody else. It just can't be Visa and MasterCard, and so forth. So now, this bill, we still don't think it's going to pass this year. I can go into another call about this bill in particular, but you are going to see a lot more headlines towards this. If anybody's flown through an airport, especially over at Reagan right now, there's an advert from the Points guy who's essentially saying, stop this bill. I actually saw YouTube influencers, not that I watch YouTube influencers, but I actually saw YouTube influencers that my kids were watching talking about this bill. So there's a lot of folks interested in here because the airlines have said that if this bill goes forward, the points programs that we all love and get through our credit cards could be at risk. Now, Senator Durbin has tried over the past 18 months to attach this to every single must-pass piece of legislation, the NDAA, the funding bill, infrastructure, and so forth like that. Don't be surprised if he tries again. I just don't think it's going to pass this year because if I'm going to, if Senator Durbin's claim here is that the retailers will essentially lower prices and it'll be more better prices for consumers, I don't take a stance on this. But for every retailer like Walmart and Target that's telling their lobbyist, hey, or telling their representative, hey, this is great for retailers, there's somebody from the banks or there's somebody from the airlines saying that this is bad. And when you put points programs that people think are actually, that people are in favor of and are fairly popular, and you say that they're at risk, a lot of policymakers will say, look, I'm not going to try and do this, certainly not in an election year. So the last thing I want to talk about is, and feel free to put a question into the chat if there's something you want me to answer. But the last thing I want to talk about is the motion to vacate for Speaker Mike Johnson. So if you've been following news in DC, you know that Representative Marjorie Taylor Greene has already filed the motion to vacate. It just requires her to act on it and at one point go to the floor and say, look, I want to have a motion to vacate. I want to try and hold a vote to kick Speaker Mike Johnson out. Now, he essentially has called her bluff by moving forward with Ukraine, Israel, and Taiwan aid. But they're most likely, remember, the House is on recess this week, but most likely there will come a point next week. I do think the motion to vacate is going to happen. That next week, Representative Marjorie Taylor Greene or Representative Massey or one of their allies goes to the floor and says, let's have a vote. The reason being is Speaker Mike Johnson most likely will not lose his job. There have been enough Democrats out there that have said, I'm willing to help the Speaker because of what he did on Ukraine and Israel. But from a political standpoint, it's not surprising that Representative Marjorie Taylor Greene would like to brandish, I can't think of the word off the top of my head, put that scarlet letter on Speaker Mike Johnson, essentially saying, I am a Republican speaker, but I had to have help from Democrats to save my job. That can't be a good feeling. Now, the question is, okay, well, what does that actually mean for Speaker Mike Johnson? And I would argue not all that much. The reason being is that nobody wants to go back to this situation of trying to find a speaker over 3, 4, or 5 weeks. You only have limited stuff that you have to do for the rest of this year. FAA reauthorization, farm bill, this funding bill, maybe some bits and pieces of legislation, potentially that stablecoin bill, additional impeachment inquiry type of language or, functions and so forth. It's not really all that much that a speaker needs to do. It's more like what a caretaker speaker could do. So don't be surprised that if this were to go forward and he survives, things just calm down and folks say, you know what? Let's just worry about the election and let the election lie. And then what happens with the election? If the Democrats take the House, it's a new point. And if the Republicans keep the House, well, then it really depends on the margin of victory there and so forth. So I'm going to pause it there. Thank you very much. I hope you have a great week. Feel free to ask any questions or feel free to reach out, and we'll have a great week, and I'll talk to you soon. Thanks. Bye.